Imagine waking up to headlines that a single crypto project is raking in so much cash, it's buying back tens of millions of dollars worth of its own token every single day. Picture a platform so massive, it's processed over $2 trillion in trades, and its token machine is just getting started. Is this the next generational wealth opportunity, or are we staring at a bubble ready to pop? Welcome to Generational Wealth, your pathway from knowledge to legacy. Quick disclaimer, I'm not a licensed financial advisor. This is for educational purposes only. Crypto is volatile. Never invest more than you can afford to lose. Do your own research. Let's dive in. Hyperliquid isn't just another DeFi project. It's a decentralized perpetuals exchange that's leaving the competition in the dust. Instead of fighting for scraps, it's captured nearly 70% of the decentralized derivatives market, sometimes even outpacing the giants of traditional finance. Today, I'll break down how Hyperliquid works, what's driving the Hype token's explosive growth, and whether you're too late or right on time to catch the next wave. So, what makes Hyperliquid so special? At its core, it's a lightning-fast, decentralized exchange for trading perpetual futures, letting you speculate on crypto prices with no expiry dates. But here's the kicker. Instead of piggybacking on blockchains like Ethereum or Solana, Hyperliquid runs on its own custom Layer 1 chain. That's its secret weapon. With its own chain, Hyperliquid delivers blazing fast trades, up to 200,000 orders per second, giving you the speed of a centralized exchange with all the transparency and self-custody DeFi promises. That's how it handled a mind-boggling trading volume of nearly $400 billion in August 2025 alone. Now, let's talk about what's fueling Hype's price. Tokenomics. Hyperliquid makes a jaw-dropping amount from trading fees, pulling in a record $106 million just in August. Most of that revenue is funneled into an assistance fund that automatically buys back Hype tokens from the market. Think of it like a company using almost all its profits to buy its own stock every single day. More trading means more fees, which means more buybacks, which means constant buying pressure on Hype. By August, the fund had already scooped up nearly 30 million Hype tokens. The numbers are wild. Hyperliquid's on track for over $1.2 billion in annual revenue. It's become the top player in decentralized perpetuals, even out-trading mainstream platforms like Robinhood for months at a time. And the Hype token? It's gone from under $4 to smashing through $57, while the platform's total value locked exploded from around $330 million in April to over $2.7 billion by September. That's a tidal wave of new users and capital. But let's keep it real. There are risks. The biggest concern is centralization. For all its talk of being decentralized, the Hyperliquid team has made some top-down decisions, like delisting tokens after market manipulation incidents. Investigators like ZachXBT have called out these double standards, raising questions about true decentralization and trust. While the team is working on spreading out governance, it's something every DeFi investor should watch closely. So, have we missed the boat? Maybe not. The roadmap is just heating up. Hyperliquid is expanding into spot trading, lending, and even tokenizing real-world assets. The next big move. Launching its own stablecoin, USDH. After a competitive selection, native markets will build USDH, aiming to keep hundreds of millions in yield locked within the Hyperliquid ecosystem. That could supercharge the Hype buyback engine even more. If Hyperliquid nails this and becomes the go-to on-chain finance platform, today's price could look like just the beginning. There's no denying Hyperliquid has built a financial juggernaut, combining killer speed, creative tokenomics, and relentless buybacks. But the centralization debate is real, and it's something every smart investor should weigh. So, what's your take? Is Hyperliquid the future of DeFi, or are the centralization risks too big to ignore? Drop your thoughts below. If you found this breakdown valuable, hit subscribe, and for the real inside scoop, join our insiders group over at generationalwealth.biz. Thank you for watching. Let us know in the comments subjects you'd like us to cover. Let's build wealth together.